What's up, YouTube fam? It's your boy Jamal. We back again for another one. And today I wanted to tackle a couple of credit myths that I've come across in my community and in my time in helping people restore and leverage their credit. And this is 5 myths that I want to address, okay? So if you're interested in this, hit the notification button, share this out with others. Remember to like, subscribe, leave a comment. So the first and foremost, the first one is credit cards are evil, credit cards are bad, credit cards just mean debt, and only have one credit card for emergencies. This is a major myth that we hear all the time in our communities, and we attribute it because we haven't been taught how to use credit cards. We always thought that credit cards were supposed to be used essentially for the things that we can't actually afford, right? You get a credit card with $5,000, $10,000 on it, and you end up and you pay for an expensive trip for you and the family, or you and Bay, or you go out and having a elaborate shopping spree, Louis, Gucci, all that stuff, right? With absolutely no plan or sometimes no intention of paying it back. Next thing you know, you got a charge off on your credit. Next thing you know, you got collectors calling you, and you're stuck in the vicious cycle of debt. Okay, but that's because the whole time we've been taught to use credit cards as consumers as opposed to using credit cards as producers. What if I told you you're actually supposed to use your credit card exactly like your debit card? In fact, you're supposed to replace your debit card with your credit card, and not just any credit card. Credit cards that are going to give you cash back, credit cards that give you points for travel, or they'll give you miles for travel. Why is this? Now you're able to double dip. For every dollar that you spend using the right credit card, you're going to get anywhere from 1 to 5% of that spend back. And we're not talking about spend that you weren't already going to do. We're talking about gas, groceries, taking your kids to the annual family vacation, things of that nature. Your everyday expenses, okay? And then at the end of the year, you're going to have this big golden pot of cash back, rewards, and points. Guess what you can do with that? You can cash it out and just put it into your bank account. Now you got a couple of $100s that you just had. It's almost like a savings account. Or you can use the points that you accumulated to take a free family or even a vacation, right? And along the way, you're going to use the card and pay it off in full every single month. Why? Because you're not going to be using your cash and your credit. You're not going to be using both. You're only going to focus on using your credit. Okay, so credit cards are not bad if you know how to use them. Now, that goes into the next topic, that debt in of itself is bad. Now, debt in of itself is bad, but here's something that they don't tell you. In order to achieve a perfect FICO score, that 850, you actually need some active debt on your credit report. Yeah. Getting completely out of debt can actually lower your credit score and damage your overall credit profile. The way that the FICO score is designed is actually designed to go up and increase and give your credit profile more points for you having and managing more debt. So the more debt you have and the more debt that you're actively being responsible for, the better your FICO score. So to put this in perspective, I know several people, high income earners, who decided that they were just going to do cash only, right? And they lasted, they did cash only for several years, 10, 15, several years, right? And then after a while, it got to a point where when they wanted to get to the next level, they needed credit. They were trying to go out and purchase a building or real estate or something like that, and the amount of cash they had just wasn't enough and they needed credit. But guess what? They couldn't qualify for credit because they didn't have any. They went a decade without ever borrowing money. So the banks were suspicious and they did not approve them for the things that they were going for, right? So not having debt can actually hurt you when it's time for you to go out and borrow money, okay? So debt isn't always bad. Debt actually allows you to reach that coveted 850 credit score, okay? Now, speaking of debt, some people believe that getting a loan, if you have high credit card utilization or credit utilization, getting a loan is going to help bring down that utilization. Not in of itself. So on your credit profile, utilization is based on how much of your credit card limit you're using. It's not based on your loans. Your loans are actually separate, and the loans count into like your DTI, which is your debt to income ratio, and your LTV, which is the loan to value, which is a percentage of how much of the loan you basically have already paid off, right? But when it comes specifically to the credit utilization percentage, a loan has absolutely no impact on that. The only way that getting a loan would actually help your credit utilization is if you got a loan and then use that loan to pay off your credit cards. And then by paying off your credit cards, your credit utilization will go to 0 and your score may go up, right? No guarantee, because your credit score is made of 5 different factors, okay? I covered that in one of my shorts. Check it out. It's 5 steps to perfect credit, okay? The next thing we want to talk about, okay? Some people don't believe in credit repair. They believe that once something is on your credit report, it stays on your credit report. And that is absolutely false. Absolutely false. Anything that goes on your credit report can come off your credit report. And even more importantly, there is absolutely no mandate saying that anything must be put on your credit report. Okay? The Fair Credit Reporting Act never said, and it still doesn't say, that anything must be reported. So if a company tells you, oh, we have to put this on your credit report, absolutely not true. There's no law that says that. You can even ask them to quote you the law that specifically states that it must be on your credit report. Ask them, tell them, say, hey, give it to me in writing. What's the law that says that? Okay, there is no law. And so knowing that, things can be removed off your credit report, because anything that's on your credit report is completely optional, okay? So you can actually use the real law, the FCRA, the FDCPA, consumer law, your right to privacy, to remove information off of your credit report. 100% legal, okay? Even the last statement or credit myth is that late payments must be reported. That is also not accurate. There are several laws that protect us from having our non-public information shared, okay? One of them is 15 USC 1666B that says that late payments can't be reported if you didn't get your bill on time. Another one is 15 USC 6802, which says that every financial institution has to give us disclosures, giving us the opportunity to opt out of having our information being reported. Okay, and then there's also 15 USC 1681A, which marks and explains what is excluded from our credit report, which includes transactions and experiences between me, the consumer, and the company doing the reporting. Okay, so that's 3 different laws that I just pointed out that prove that information and late payments and payment history shouldn't even be on your credit report in the first place, especially without your authorization. So these are some of the